What's going on, guys? It's David Piatek and Dewayne Kimble. I didn't even know my own name there for a second. Hey, guys, we had a I was like, what happened there? But we had a little bit of a typo because I'm traveling with time zones. So we were originally going to have it. It was supposed to be at this time. We got switched to an hour ago. So thank you, everyone, for coming back to watch the live event. So obviously, a lot of things we want to talk about. Do you guys have questions about the VA home loan, questions about VA disability compensation? We're going to be covering all of those things today. So whatever questions you have, always happy to answer them. Dewayne, I got a video for that. Kimble, how are you today?
Hey, I'm doing good. Just grinding away. Got a lot of good projects coming up. I'll be talking about this evening. But thanks for having me.
Yeah, of course. No, we've been doing this now for what is it? 2 years?
Over 2 years. August.
Yeah, over 2 years now.
Yeah, over 2 years. Yeah.
Yeah, so it's been awesome. So hopefully, if you guys have gotten some value out of our videos, doing them together, drop that in the comment section. Let us know because, we've been doing this every month now for a little over 2 years. And we're also starting to do some videos just because a lot of things are changing. And it's very important to understand, both sides, right? VA disability compensation and VA home loan are two big benefits that you have as a veteran that you can utilize. And it is life changing. Because from a VA disability side, that adds additional income to your bottom line, right? And some actually a lot of veterans, Dewayne, can buy homes with just VA disability alone. And then from the housing side, right, owning a home creates stability. Now, the debate of, should you own, should you not? Always happy to discuss that. And I do talk about that on VA Housing Education's channel. And Dewayne, I know you do a lot with the VA disability compensation. And it is complicated, right? It can be complicated. And this is why always reaching out to someone that knows what they're doing makes the process smooth. And right. So that's what we always try to focus on. But yeah, guys, start dropping questions in the comments. And then we can, if you want, Dewayne, do you got any updates on the VA disability side of the house?
I got tongue tagged there. Tongue tied.
Just like my name.
Yeah. No major updates. A lot of people have been asking me, David, about these changes that was supposed to take effect in April, supposed to take effect in August. People, don't pay attention to that. That is something out of your control. Control what you can control. So tinnitus, if you're not service connected for it, get that intent to file in, file a claim. Sleep apnea, same thing. If you're trying to get service connected for a mental condition or get an increase, same thing. Get those claims in now, but you have to understand, hey, do I meet the criteria? Do I get my own DBQ and Nexus statements? What does that look like? Okay. So a lot of people have been asking me about that, but we can't control that. They're going to do what they want to do when they want to do it. So control what you can control, and the way you control it, get those claims in now.
Yep, 100%. And like I've said many of times before, it seems like VA disability benefits continue to get harder while the VA home loan continues to get easier. So waiting, like I would say from a VA home loan perspective, it makes sense if you're waiting because your financial picture, right? We always talk about that. It may be the right time, but it's not the right you, right? Meaning that you have to put yourself in a good financial position and then you go into home ownership. For VA disability, like if you're waiting, things are already bad. They're going to continue to get worse. So it's better to get compensated at least for it now, because sometimes the process takes a while, right? I've talked to people, Dewayne, that have been like, I've been fighting the VA for 20 years. And for some veterans in their first shot, they get to where they want to be, right? So those are all positive things, but you really need to understand what process you're going through. So I guess let me give a couple updates on my end before we dive into the questions. And again, guys, we're here for you guys. So please make sure that you drop your questions in the comment section so we can go over them for you. Okay, so one big major update, and I'm sure everybody across the country is talking about, is that the Fed meeting is going to be on Wednesday next week, okay? Now, a couple of things, because I'm sure you're seeing headlines on mortgage rates and everything else that's happening. Next week, they're anticipating, right? The investors out there have a 90% confidence rate that they're going to be dropping interest rate, the Fed funds rate, at least a quarter. Okay, so that is important to know that. we're starting to see markets shift and basically price in if that happens. Now, I want you guys to remember something very important. Last year in September, we are almost in this deja vu moment. Okay. Last time, rates like dropped to 5%. Everyone's really excited. Fed met. They dropped the rates 0.5%. Everyone was expecting a quarter, right? So you think doubled the amount of positivity. And what ended up happening is because they dropped at 0.5%, rates skyrocketed. Okay. So you kind of have to take it with a grain of salt, right? So markets will price everything in by the time, Monday, Tuesday comes out. And then from there, what's going to happen is that they're going to react to the news, right? And especially in today's society, like news is instant. So you're going to see that and happen in real time. So that's why it's important to either, if you're thinking potentially about refinancing with an interest rate reduction refinance loan, because you have a VA loan, you can schedule a call with me. We can go through those options and see if it makes sense. If you guys have questions about that, drop it in the comment section, because I could break the whole thing down for you guys to see if it makes sense. Or if you don't have a VA loan because you were steered away from the VA loan, coming to a VA loan can also happen, but it definitely is a different process. It's almost like buying a house in that sense, but that can make sense. So that's been some of the big stuff. And obviously we've talked about before is that the new vast replacement program, well, obviously that was signed into law, but it doesn't take effect yet. So I want to make an update on that, Dwayne, because they have till January to implement it. And a lot of veterans that are facing foreclosure or they're behind on their payments, they are kind of in this middle ground where they can be forced to take maybe a, what's it called? When you're a loan modification, where they go from a 30-year to a 40-year mortgage. And I'm totally against that. Okay. And I cannot iterate how much I am against that, because the amount of interest that it adds onto the mortgage is wild. Now, once you do a modification, you've made 12 months of on-time payments, right? Then you could potentially refinance into a lower rate and back to a 30-year mortgage. Yeah, your payment's going to be a little bit higher, but you're going to save a ton. They get, the funny thing, Dwayne, is that the VA is allowing these 40-year mortgages, and they used to offer those back during like when they were offering no income, no asset loans. And so they got rid of them because it didn't make sense. And so now they got rid of them. They didn't make sense. You could do only 30-year mortgages, but for people that are in trouble, that needed help the most, now we put those people in the 40-year mortgage. That doesn't make any sense.
Yeah.
So you just have to be aware of that.
With that being said, Dave, and I may have to get with you offline, but I'll ask you, how do you, I know I've seen a couple of YouTube reels where a loan officer is sitting at his desk and he says, hey, this is how you pay your loan off faster. And he uses this calculation, multiplies it by something and says, okay, every month, your mortgage is this, but every month, this is what you want to pay on the principal. And then after 15 years, you've took that 30 years down to 15 years. Do you know how to do those calculations?
Yes. So you normally just use a mortgage calculator. So let me break down. So that's a really good question. I've been getting a lot of those as well. And I actually just recorded a video, so I'm going to do a spoiler alert on it a little bit, right?
David, David, the VA home loan GOAT Piatek. Go ahead. Yeah.
I like that. We're trying to come up with a tagline. So we thought of like David, the mortgage GOAT Piatek. So let me know if you guys like that. It could be an idea. But yeah, so if you guys have that. So when it comes to paying down your mortgage, if you get a regular 30-year mortgage, you can make 15-year mortgage payments by essentially taking the spread that between the 30-year and the 15-year and doing a principal reduction every single month. So that's how you can save money. Now, you could just use a simple calculator, go online. I mean, I just went to like any search engine, type in mortgage calculator, put in how much you owe, and then or like the original balance, put in what your interest rate is currently, and then put it into a 15-year and see what that payment is. And sometimes you'll be pretty surprised on how much you actually, one, you're going to be like, well, maybe it's not as high of an increase as I thought. maybe I can do that. Because if you save 15 years worth of payments, Dwayne, that is huge, right?
Oh,
It's
yeah.
not for everybody, but if you have extra income, or let's say you have income like a regular job and plus VA disability, and you're like, well, I can make my payments with my regular income. Why don't I take my VA disability and do a principal reduction? Right. And we've seen veterans that have 100% permanent in total, and then they have, a job that pays them enough to cover their bills and their expenses. And I've seen people throw in $4,000 a month towards principal reduction and pay their home off in like 6 years. So
Wow.
you can do it. It just takes sacrifice to do that. But yeah, it's a great hack. Like I did it on my mortgage. I'm like, wait, a 15 years, how much? I can do it. So I made the update, and then now I'm like, I'm going to save a ridiculous amount of money. But especially if you're in the lower interest bracket, right? Then you can make extra payments and then pay that off a little bit faster. So that's all real positive.
Right.
And yeah,
I heard the supposed business guru, and he was saying, the poor and the middle class, they just think of paying things off. But and he was talking about taking, real estate, taking money out and reinvesting it. And I'm like, listen to what you just said. You save, if you pay it off sooner, what you would save. And you could take that extra money and then go invest it and not
right.
have this, this high debt. Because if you refinance after you paid your home off and still get a lower interest rate, you're not going to, more than likely, I wouldn't think that you would refi for another 30 years. You might say, hey, I want to refi, take this much out just to reinvest, and you still have a lower mortgage.
Yeah. And so, yeah, I mean, one side thing to note for you guys out there is that if you have a paid off house, you can't use your VA loan to do a cash out refi. That's number one. Two, if you pay off your home, you can always do a home equity line of credit. I've said that a million times. Some people will drop a comment like, don't do it, until I talk to people that are like, hey, I ran into a financial problem. I have a ton of equity in my home, but we had a life event happen. I need access to cash. And guess what?
You have to do it.
You can't do it. Right. So I think I've said this a lot, is that when you don't need money, people want to give it to you. And when you need it the most, they don't. Right. And that should also be coupled with your credit. Right. Always remember that. Because, Dwayne, if I'm going to give you some real life examples that I've talked to so many people this month about. You have a house, right? You own a home. You miss one payment, and then you can't recover from that one payment because you missed that payment. Lenders don't take partial payments, so you have to make the full payment in full. Then you get to the second month, and you're like, now I got to pay double the amount. I definitely don't have that money. And then that's how it trickles down. So this is why budgeting is so important when it comes to homeownership. You shouldn't just be thinking like, hey, are my day-to-day bills being paid? You should be thinking, hey, how much, what's my budget? How much have I put aside? What's my emergency fund? Can I support my mortgage for 3 months if something were to happen? And sometimes I'll tell you this, is that I would recommend probably keeping separate bank accounts. I just talked to somebody that had their bank account hacked and they lost all their money. And so that's how the foreclosure process started. And then now they're working to get their money back with the bank because it was fraud. Like, those are things that you don't want to see. Again, you work your life you serve your country, like we've all done here. You have these amazing benefits, but you're just not leveraging them, or like you want to leverage them, or you've leveraged them, and now all of a sudden you're going to be losing your benefits because of this foreclosure. And that's one important thing to know, that if you do have a foreclosure with your VA home loan, and let's say it doesn't generate enough money to cover the mortgage, then you're going to lose a portion of your benefits. Okay. So that is very important to know. And then you're going to have whatever's left over. And I did a whole video on having multiple VA home loans. So that is something important to note. So if you guys are interested, check that out. Because anytime anyone has a question, or when I talk to them from the calls, because you can actually schedule a call with me in the description, I use that as a video. Don't worry, I don't mention people's names, but I bring it up to be like, hey, were you aware of this? Because you're going to have questions. And it's just like VA disability compensation and VA home loans there's so much information out there right now. Where before, right, Dwayne, we were just talking about this 20 years ago, people didn't even know what the internet was. Today, it's like the internet has made people, how do I say this nicely? They were like, the internet's going to make everyone smart. It's kind of done the opposite because of not having the correct information, right? And that's how I came across your channel originally. I was like doing research on VA disability. I'm like talking to people, other veterans, and I'm like, something doesn't seem right here. Like, would I trust somebody that was a raider, or like, your battle buddies, and they're like, yeah, this is an impossible process, and this is the thing. So yeah, there's a lot that goes behind it, and this is why taking financial control and information control is so important.
Most definitely. We were talking about something earlier, the mindset of people. We were talking about credit scores and stuff like that. And I was sharing a story of me in college and just running wild. I was in college and I had like 11 credit cards. I'm a college student. What do I need with 11 credit cards? And these companies would show up on campus and they were just giving out 1,500, $2,000, 3,000. We get back to the dorm room, man, how much they give you? Oh, I got 3,000. Man, I got like 1,800. And you go into the mall buying clothes and stuff like that. And now, you get older and you're like, man, I'm checking that thing like, okay, I'm ready to buy a house and I got ready to purchase a home. And I was like, okay, in 2 years, this is what I'm doing. We talked about it before.
Yeah.
You just got to have that plan and you got to stick with it. You got to stick with it because, I can't imagine going to closing and not understanding just because you got pre-qualified. Oh, let me go get a credit card at Rooms to Go so I can go and buy a bunch of furniture. Oh yeah, we got furniture. We're moving in tomorrow. And you get to that closing. Nah. Credit debt ratio is out of whack. And then you can't close. That is the wrong time.
Yeah, 100%. Yeah, that's one of the things that just preparing for home ownership is such an important part, right? And that's why I do the channel, just to get people I think mentally ready to be like, hey, is this the right time? Is this going to make sense for you? And some people, which I think we can kind of talk about while people are trickling on questions, is that VA disability is such a big part too of qualifying, because one, if you guys have a 10% or higher disability rating, you don't have to pay the VA funding fee. That's huge. That saves thousands of dollars easily for when you buy a home. And the second part is you can use it as income, right? And I'm going to actually be doing a brand new video because, we do a lot of videos around VA disability and home loans, but they're like pieced together. Okay. Yeah. I'm going to be making the ultimate guide on VA disability and VA home loans. So I'm going to explain every single aspect of how do the property tax exemptions work? How do I look them up? Hey, what are some banking resources that I can get free bank accounts, right? Because a lot of times veterans too, from a banking perspective, they may be trying to get a checking savings account, but they're overpaying in fees and, because they have to have minimums. And like, why are you giving someone else money, right? You should be holding that money yourself. But that's why it's so important to budget, because good budget leads to good credit, right? Because you're not overspending. And like you mentioned, a lot of times if you got credit cards, you got all these things, like the idea of, hey, I could get an interest-free credit card and I could maybe delay, paying for things I have credit, and then I could put more money in my bank account. That can backfire real quick.
Yeah. And some that my mindset, and I tell people one thing that I'd never bought in my life. I've never had a pair of Michael Jordan shoes.
Michael, I thought you were going to say it like a yacht.
Well,
or a jet ski.
that too. But it's nothing against Michael Jordan. I think, the greatest player ever. Okay. Huge fan. I can't afford his shoes.
Yeah.
And my mindset cannot afford his shoes. I mean, you got these like LeBron shoes and they're like, 300-400 and they come in I can't remember who it was, but you got like a suitcase. It came in a case, and I'm just like, man, I can't, in my mindset can't afford that. It's just, and I think people have to be disciplined in their spending. I get it. It's a product. Shoes look off the chain, really nice shoes. But for me to go out and spend, $400 or $500 on a pair of shoes, my grandmother used to buy me these blue sneakers, and they were called Kids. I don't even think they didn't even have a name, and they were like $3. And she would like, I gotta save to get these, get you some shoes. And I'm like, I can afford thousands of pairs of shoes if they were $3, But at the end of the day, it's a mindset and being disciplined.
Yeah, and the problem with today is that you could spend money faster than you can make it. That's you have the internet. You're looking at things. They keep marketing to you, right? They know what they track you. They know what you're talking about magically. Like, and I'm talking about something with somebody, and then I started looking up, like, how did magically this come up in my feed? Because they're listening to us. It's a conspiracy. They want us to spend money. And I say that, and I'm going to mention something that the government. I know this is going to already sound like a conspiracy theory. Okay. Every time politicians, I want you to think about this. Every time politicians talk about the United States, what do they say? That America is one of the biggest consumers. Think about this. They always say, America, we're a great country. We have a lot of power because we are consumers, the world's biggest consumer of things. Think about that. From a high level overview, my personal opinion, okay, and this isn't a conspiracy theory show. They want you to spend money because they have the power. Then, because we're the biggest spenders, why don't they come out and say, "Let's come out with full budgeting help for people. Stop spending money. Save all your money." Because what would happen to this country if that happened? We wouldn't be the biggest consumer in the world, right? And then you lose power because of that. We have power because people spend money. And that's why it's not like, I feel like that's why it's just not taught every day. Like, they should be running ads every day, paid for by Uncle Sam, saying, hey, or the shows, advertising companies or TV shows or whatever, networks should be saying that and not charging people like, hey, budget, stay home, don't go out. Hobbies are expensive, and I get that, right? You need to get out of the house, but when you're going out, and like, I went out and got some chicken wings and the beer, $60. I'm like, what's happening here? I'm like, that's I probably, you guys can tell I'm traveling right now. I'm at a hotel, but I'm just like, man, it's kind of crazy when you don't save it and you kind of just spend money, like I did on this chicken wings and beer, and this is where I'm at. So they were good, but I'm just saying, like, you just want to eat at home when you can, and like we do, right? As much as possible. So, and that's the same thing, Dwayne. People get in trouble with car payments, but I'll throw up some of the stuff that people are saying. Like I said, guys, I know we kind of messed up the time, but if you guys are in here, drop questions, even if you want to get some confirmation on what you're thinking, housing related or not. So we got Grace. What's up, Grace? Good to always see you on these. So I appreciate that. Kelly, thanks for joining us. I know they were talking about here, Kelly Jennings, are we early or it just isn't any feed? So again, we're sorry, but the graphics did say that, but again, that's our bad because of that piece. So someone's saying thank you for joining us. Robert, thanks again for joining us today. The dynamic duo, let's go on fire. Chris, thank you, much appreciated. Annette joining us, so that's awesome. Thanks for joining us on this live event that we kind of delayed. All right, so this one's talking about, Jason's talking about, I heard it takes effect in January. It's on the VA news. So I'm going to go into that and actually check that out to see if they made that announcement. I've been traveling a lot lately, so I need to take a look at that. So what they're talking about is what we talked about earlier, which is the program that for when the new replacement of VAST program goes into effect. So if it still comes up in January, for a lot of veterans, still it's $1 short or $1 late, $1 short, right? Because if they need to make these decisions right now, what are they going to do? And just to kind of reiterate what this new program is, essentially VAST would just basically take over your mortgage. The VA would service it. They gave you a 2.5% interest rate. obviously they came in and said, like, look, we can't even borrow our own money at that rate. So they scrapped that program and they redid the program where essentially if you become late on your payments, the VA will come in and put a second mortgage on your house for the amount you're behind, and then you continue making your regular payments. That's my understanding of it. Okay. So obviously people are not happy because it's far less attractive than the VAST program. But from a monetary perspective, like how they spend money, maybe people will disagree with me for sure. But like it makes more financial sense that they do that because the VA is not designed to service massive amount of mortgages. Okay. So that's why also, yeah, that's not how it's done. But this one I believe is for you, Dwayne.
My claim just had a ILER. Let me know what that is. Upload it to the files. What's the timeline and next steps from a rater's perspective? I never heard of that acronym ILER. You're saying holler review, but either way, regardless of what you're doing with your claim, there is no time frame for anything. Now, the VA on their website, they may say, hey, holler reviews, spec 365 days, a regular claim 125 days. Those are only estimates. I've seen claims. I've had clients submit a claim on a Monday and get a rating decision on a Thursday. They come back, do the same exact thing. The condition is different, but they follow the same process, and it takes 2 months. Okay,
Wow.
so there's no set time frame on anything. Nothing.
Wow. Yeah,
They're a lot
that's
faster than they were, 10, 15 years ago. I'll say that.
yeah. And so this is also why the VA doesn't do mortgages, because it would take them like a year to buy a house. And I'll point something out for you guys, is that a lot of veterans confuse and think that the VA is setting the guidelines as far as what the rates are and fees for the lender. So a lot of times veterans, they're just like, this is my opinion, because I look at a lot of these every day, thanks to people reaching out. I'll look at them and then be like, they're overcharging you. I'm like, hey, we can offer you this with no fees, no that, still get a better rate. And then I'm like, and they're like, well, why didn't you call me before? Like, why did you call me like right when you're closing or after you closed? It's like, well, that's what they said. That's what the VA does. And I'm like, you just got taken. Okay, not necessarily scammed in the true sense, but you got taken for a bunch of money. And sometimes people reach out, Dwayne, and they'll be like, I think I did that with you, right? We were like, David, can you double check my estimate and see if I got taken? And I'm like, you did. And so, I do that.
That was a closing, the closing disclosure.
Yep.
And I was like, what is this $1,500 or $1,800 fee? And you're like, yeah, you got. You just paid their marketing.
Well, that's what I say. Like, nothing is free. We do like a lot of YouTube stuff because we want to bring people and provide education, right? And that's the same thing with these claims companies. If they're paying a ton of money on marketing to market their services, guess what? They're charging you higher percentages, taking more money from you. Mm-hmm. And then I think that's the real big difference from our end. Educating people on the process. And then if you want to work with us, great. But then you get that same knowledge base when you're going through that process, right? Dwayne, you got a book. I was at his house. He is real. He's not AI. He signed it for me while I was there, and I saw the stacks of books that he signed. So I know it's legit. So
I've had people say that I'm not real. Somebody say, oh man, this guy's fake. He's, it's like an AI video. I'm like, how do you, I've made AI videos. It's not the same. You know what I mean? But,
yeah. I was actually working on, in fact, I've actually been working on cloning myself through AI for my knowledge base. So you guys will soon here in the future be able to like go in my own type of AI and then type in all your questions. Because sometimes people don't want to reach out because they're not ready. But I would say if you're a year out, you're ready to reach out at least, because then we can go through different things. So yeah, but that was a good one. That's okay. Grace had a question, made a comment. Do we designate that as separate payment annotation as principal? So what we talked about was that when you want to make an extra mortgage principal, or when you want to make a principal reduction, you have to annotate that on your payment when you go online or you do it in person. And this is the crazy thing, folks. Sometimes they have an option for you to make an interest payment, which is literally giving them free money. So please never do that. If you're going to do it, annotate the principal payment. And another thing I want to add to that, Dwayne, is people will ask me, when should I make that payment? Should I do it once a year? Should I do it once a month? Should I do a bi-weekly payment, bi-monthly payment? So I'll tell you this. A mortgage recast. I'm going to start taking real technical here. Let me step back, because I always do this and I just go down the rabbit hole. When interest is calculated based on the balance of your mortgage. So when you make a principal reduction, the loan recasts. What that means is that when, let's say your mortgage is $100,000 and you get charged 10% interest, now your mortgage interest is $1,000, let's say. Okay. I hope I'm doing the math real quick here. If you made $1,000 principal reduction, right, and you have a 30-year mortgage, now interest is going to be calculated on $99,000. So now $9,900 of that is going to be interest. The rest of it's going to be principal. So that's how it works. So you want to be able to front load that as early as possible in any given time, right? Not in the month, just whenever is the earliest. Like, I have the money, let me put it in. So some folks will just automatically set that up on their payments, or, based on your budgeting skills, you can just be like, hey, I came into extra money. Hey, tax season came around. I got a check back for like $5,000. Then you can do a principal reduction with that, or pay off some high interest debt. So those are things that you got to think about when you're going through that process. But that is a good question. Vets Life, thanks for joining us again. We got a lot of fans on here that we've talked to a lot. So I really appreciate that. Yeah. They were the ones that like, you know what? They probably messed up. We're going to stick around till they come back. And I think this is the first time we've had that mistake happen. But again, guys, that's my bad. I'm traveling, so I was switched from Central to Eastern time, and then I did not check. All right, we got a question for Chris B. So always great to hear from you. Now, if I have a VA loan currently and a friend and I want to get an investment property together, is it possible to get a VA loan to do that? Chris, I like the creativity. So let's break it down. So VA loans are designed to be your primary residence, number one. So you wouldn't be able to get an investment property. But what you could do is, if you didn't have a VA home loan and you wanted to buy another home with a veteran, it's called a joint home loan application. That's where two veterans can split their benefits and purchase a property. Furthermore, not only can they do that, the VA loan is limited to 4-unit purchases, okay? A regular VA purchase. But you can also do a 3-unit plus a commercial space. A lot of people don't know that. And if you do two veterans doing a joint home loan application, you can technically buy a 6-unit building. That's real technical. I've never seen it done. The VA has it as an example in the VA handbook. So that could be possible. Normally in situations like this, Chris, you would just go into a regular investment purchase, right? Do the 20 or 25% down payment, do a conventional loan. When you start getting into these creative, like, hey, we want to start buying investment properties together, you could do other things. Like, let's say both of you own homes and both of you have a lot of equity in your property. You could both take out HELOCs or HELOCs, fixed or adjustable rate adjustable mortgage for your second, and then use that money and buy a home together, right? So that could be good. So basically you buy a home cash, throw it into an LLC, potentially, not an attorney, talk to one. And then you basically just leverage your home, and then you just write off the interest that way. I'm not a CPA either, but I have a mortgage. So you want to just think that about those options. Other times is if you have a lot of equity in your properties, you could go the commercial route where you do a cross-collateralized loan where they'll put a lien on both of your homes. You put no money down on the new property, and then you can leverage it that way. But that's why you have to. I would highly encourage you to watch my investor series on my channel that I just did with Lourdes. we talk about that because you need the debt service coverage ratio. What does that mean? So that's going to factor into your VA, into your purchase. And why I bring that up, because I could probably talk forever, is that when it comes to buying an investment property, you don't think like a normal, I'm not saying normal person, because you're an investor, right? You're thinking of it not from hey, how little money do I put down? You're thinking of it, how much do I need to put down for this to make sense? And you have to remember, investors in general are putting 20, 30, 40% down payments to meet this debt service coverage ratio. And so you think to yourself, well, why are they putting so much money down? But and then they know they can't recoup that money right away. Because investors don't think of, I need to recoup my money right away. They are investing, hence the name investor, investing money into property to then get a future gain. And they also use the investment property as a tax vehicle. Again, not a CPA. Because now they're taking an asset they bought, they're depreciating that, they're offsetting their personal taxes, writing off everything. So they're not paying taxes. So it also depends on what your tax bracket is. And do you need those savings? Dwayne, I had a really good question from a veteran yesterday. He's like, you know what, David, I don't pay property. He's like, I don't pay taxes because all my income is tax-free. I have a property. Should I turn it into investment and buy another one? And it kind of stumped me because I'm like, wait a second. You don't pay property taxes. So what's the advantage of you writing off all this stuff on your taxes then, right? And the key here was, this is the crazy part. You don't pay taxes because you have all your income is tax-free. You have an investment property now. Now you have income on that property, which now you potentially could pay taxes on. You write that off with your CPA. So now you got tax-free income, and then you're not paying any taxes on your investment property. Another person, a tenant, is paying off that home for you. They're paying your taxes. They're paying the insurance. They're covering everything. Think about that. The power of you're not paying taxes and then someone else is paying all that off. So
yeah,
I know that was long-winded, but it is what it is. All right, this one, I'm not sure what the HSBC 0708 was a disaster. What a disaster. What is that?
Yeah, I don't know. Grace, let us know what that is.
Yeah, next one. Hey, Dwayne, I got a video for that. And David. See, I didn't even mention my part, but that's fine. That's fine. We're gonna be one-sided here. That's fine.
We'll be working on it.
Yeah, working on it. Thank you, guys. Information needed. Bar saying thank you, guys. Much appreciated. Vets Life, Dwayne, I just joined the Hundo Club. Thanks for the video guidance and not giving up. I tell everyone to subscribe to you, which is awesome.
Yeah, she's Vets Life. She's been showing up, leaving comments on my YouTube channel. Again, like David said, thank you for not giving up, staying in the fight. Congratulations. Yes, I like that. I like that. Congrats.
Yeah, a lot of people saying congratulations. So yeah, I'm really happy for you. And that's the thing, Dwayne. I sometimes feel like the VA wants you to give up, and it's tough. Listen, like going to some of these CMP exams where they're like supposed to do 9 different DBQs and they finish in 15 minutes, and you're like, what just happened? But that's like fighting and going back, just not giving up for that. And that's why it's also better to do it earlier than later, because sometimes if it's early on, I know that with the scheduling process with those CMP exams can be pretty brutal because there'll be like 2-week notice and you got to give work that notice. So
yeah,
that's that piece. All right, Chris, if eligible for property tax exemption, can call lender and ask for out of cycle escrow analysis, may remove property tax portion from escrow quicker, just an FYI. So I'm not sure what the context of the cycle escrow analysis is. But I will talk to these property tax exemptions. And this is something that I've been finding out real quick recently. A lot of veterans are living in states that really don't have much VA disability benefits for property tax exemptions. So a lot of people assume that, hey, I have 100% disability. I'm going to go to the state and the county, and I'm going to get my full tax exemption. And guess what? They don't even have a tax exemption. And now you are banking on that, budgeting for that. That is a big issue. Now, if you're in a state that has it, you also have to be very careful. Florida and Illinois are in arrears taxes being paid. So in 2025, let's say you're paying 24 taxes. Okay. So in order for you to get your tax exemption, if you buy in 25, like in Illinois, you're not getting it to 27. So that could be a while that you're paying those taxes. So you got to be really mindful of that process when it comes to that. So, all right, Tony, first here for the first time. So thanks for joining us.
Yep. Welcome.
You see the comments are very positive, so stick around.
Yeah.
Fred asking, sounds like a real estate loan. I'm not sure what that was in reference to. Someone asking, Annette, has anyone heard of Veterans United?
I was waiting on you to get to that.
Oh man, I don't even want to talk about it. I'll tell you what. Okay.
Don't get you started.
Don't even get me started on it. That should tell you everything you need to know. But I'll tell you something in general for folks out there, okay? If I have to spend millions of dollars a month, and I don't want to spend anything, but let's say I have to spend millions of dollars a month to gain customers. Who has to, Dwayne, maybe you're going to have the answer for me. Who has to pay for all that marketing?
We do.
That's
you
right.
do. I do. Yeah.
I mean, I don't, you don't, but people out there do that on an everyday basis. And so this is why, again, we do what we do. Education is key, right? People want to sell to you every single day, and it's savages out there, Dwayne, straight savages.
Oh yeah.
And that's why I tell people, it's like, when you call me, you get a real answer. Just like when we're talking here on these live events, I'll be like, don't do it. It's not worth it. Like, hey, I want to refinance my house, and I'm like, you could do it, but look at how you can do it without doing it. Right. They'll call me and say, David, can you help me with this? And I'll be like, you know what? To do this, it'll be cheaper if you go here.
Yeah.
Or you get it better. And I'm always straightforward because you have to be, at least in my mind. Plus, we do this on video. Probably get a lot of people blasting me on video too. They'll be like, I can't believe they did that. But that's why we do what we do. We want to get you guys educated so you know where you're at. But yeah, thanks to that for Anita. I might have said that wrong. So I appreciate you. This is what Grace said, not me. All right, next one. Are there any low-interest Assumable VA loans available in my area, and how could I find out? So, Jordan, that's a great question. First, for you guys that don't know, that if you're like, hey, I want to get into the real estate market, but interest rates are high, whatever the case may be, okay? You can actually go in and assume another veteran's loan and swap your entitlement. Let me give you a quick example. I have a house, for example, that I want to sell for $500,000. I got a $400,000 first mortgage, and I got a 2% interest rate. Okay. Dwayne comes in and says, Dwayne, I want your $400,000 2% loan because I have my VA loan, and I'm going to put my VA loan onto your VA loan and free up your benefits. It's called the substitution of entitlement. Okay. And now Dwayne gives me $100,000 in cash, money, of course. And then he assumes the $400,000 mortgage. Okay. And now we swap everything out. Now, one big thing that nobody talks about is that you can assume another veteran's loan and lock their benefits into the property. And why would that happen? And Dwayne, it's happening at an alarming rate because a lot of older veterans don't need their VA loans anymore.
Oh,
so you can come in from an investment perspective. So this is the one time that you can assume you can have a VA loan purely for investment purposes at the time that you assume it, because the loan met occupancy requirement by the original owner. So kind of think of that, food for thought. Okay. If you're sitting on cash, and that's really the only way you can do this, or if you have a HELOC on your house or something, then you can draw on it, and then you can do something like that and buy an investment, because they do allow you to use HELOCs to purchase properties. So this is why the power of the HELOC is. Now, Jordan, where you can find it, you can go to places like Assume List. Mike's the owner of that. He's a Marine Corps veteran. So yeah, you can go up to Assume List and check it out. Someone asking, Fred, I started with Veterans United. Good luck. Congratulations. Let's talk about earlier then.
So
I
it'll
like
be there
this. Easier
soon.
to watch than a marathon. LOL. Okay, this one's for you here.
I got a video for that. What's your experience? Pyramiding. Look at video of mine on pyramiding. There are certain diagnostic codes that can't be combined. I would have to go back to that book that's back there. Dave's saying, I think you've seen that book in my office.
Oh yeah, that's
Uh,
huge. I saw it
yeah.
in real life. I'm like, that's a
Yeah,
weapon.
yeah. And even Fry got it. I know him really well. He called it the VA Bible. Free guy. You know, I'm saying Fry, free guy. But you got to look at pyramiding. Okay, both of them are severe. They probably would combine them, and that's something that I don't keep up with because it's in each body system. At the beginning, the 38 CFR talks about, hey, especially like respiratory, like sinusitis, can you combine sinusitis and allergic rhinitis? No. Sometimes other body system diagnostic codes in certain body systems, you can break them out. And if you break them out and you get service connected, that's better for the veteran because that moves the needle closer to whatever max percentage they feel that they believe they should have. So I would go to the Jordan, go to the musculoskeletal at the beginning. It will tell you, hey, these diagnostic codes you have to combine. Okay, so if plantar fasciitis, flat feet, was it flat feet? No, flat feet. Assuming 50%. Pes cavus, yeah, you have to look at those diagnostic codes to see if they can be separate. I want to say no, probably would be pyramiding, but again, I would have to go out to the regulation to confirm that.
This one's for you, Dwayne.
Currently rated DB. All right, currently rated at 20% for IBS. My IBS laws clearly indicate that I should be rated at 30% per the 38 CFR. I'm in the process for an increase. Any tips on helping me get the 30% beyond my logs?
Okay, and he did
Yes.
mention something to that.
Oh, at 94% right now, and that's the extra 10. Okay. Yes. Go to the diagnostic code criteria. And this criteria is in your rating. So if you go back to that rating decision that grants you 30% for IBS, go down to the next paragraph. It'll say this percentage, which is the next higher, is not warranted because of X, Y, and Z. Make sure you have evidence for X, Y, and Z. I talk to veterans, and they'll say, hey, I should be 50% for my migraines. What's the criteria? Oh, I got an X-ray. X-ray is not in the criteria. Don't overcomplicate it. I'll ask veterans, they say, I should be 40% for my back. What is the criteria for forward reflection? Or what is the criteria for 40% for the back? You have to know these things, get your intent to file in, understand what the criteria is for the next higher percentage, and go out and start getting that evidence. If it take you 2, 3, 4 months, not a problem, because guess what? You already have the intent to file in.
Definitely. Grace mentioned something about debt service ratio and capital gains, two separate things, but I did talk about that, so good. Good question. Interesting. How many veterans can come together on this style of investing? So if it comes to the joint home loan application, to my knowledge, it's only 2.
You had someone above that, Joe Mack.
Oh, I didn't see that. Oh, shoot. Okay. What are the equity limit that someone can tap into on a HELOC for a VA loan? So, Joe, 2 separate things. Okay. VA doesn't offer HELOCs. They don't offer second mortgages. So you have a VA home loan, you can get a second mortgage after you've bought the property. What you can't do is you can't buy a home with the VA loan and a HELOC like the 80-10-10s or 80-20s they used to do back in the day. The amount of equity you can tap into on a HELOC will depend on the bank you work with. If it's a HELOC, I always recommend just going to a local community bank, like a real one, not the big brands that have a local branch, but like a community bank. They normally are going to be the cheapest. Okay. That's what I would recommend. Now, Dwayne, don't answer this question. Ro has a question. Do you have sleep apnea video? I'm going to let everybody know. If you don't know his name, Dwayne, I got a video for that Kimble. He's probably got like 40 videos on that.
Yes. You took the words right out of my mouth, David. Yes. So I tell people, I do this. When I started my YouTube channel, I'm out there on YouTube looking like how to start a YouTube channel. I put in keyword searches. go to my channel, put in a keyword, pyramiding, range of motion, sleep apnea, PTSD stressors. All those videos come up. Okay. I have over 700 and people say, well, can you send me the link? No, I'm not going to go to my channel and sift through 700 videos when you can do it,
Yeah,
but
and it's
yes, bro.
easy to do.
Oh
So,
yeah,
like,
very easy.
the funny thing is, I have a ton of videos too. Sometimes I'll forget something and I'll go to myself and I just search it. So when you go to the YouTube channel, okay, not the search bar up top, but when you go to the channel itself,
Right.
you can actually go into the search feature of the person's personal videos and put in a keyword and it'll pull up all the videos that have that keyword.
On that channel.
Yeah, on that channel. Yep. So Robert says I have a CMP exam next week. Make sure you do your homework.
Yep. Nobody
Foreclosure
showing
back
up.
in the day and lawsuit, mortgage origination, servicing. I'm not sure if she was referring to some of that. All right, let me go to some of the next comments we have. This might be for you.
The VA has denied a lot of claims for sleep apnea due to weight gains, obesity as the excuse. Have you seen hypertension and weight gain? I've seen it secondary to hypertension. I have seen it due to weight gain as well. I can tell you right now, if you claim sleep apnea is secondary to a condition, 9 times out of 10, either a VA CMP examiner or a third-party examiner is going to say no. But I've been saying a lot of vets, they go out and get their own DBQ from a private provider. Okay. As a rater, I saw one examiner, and she was in West Palm Beach. It was a female, said sleep apnea was due to a veteran's mental condition. One time, 15 plus years being in this niche, only seen it one time from a VA CMP examiner. Majority of the time, when you hear a vet say, "Hey, I claim I got service connected for sleep apnea secondary to a mental condition," they had their own DBQ and Nexus statement.
Wow, powerful stuff. All right, good question. Is it possible to get a construction loan if I've started and poured the foundation on my land?
Ooh.
That's a great question that I cannot answer for you. You would have to talk. So one of the reasons why, Dwayne, I already saw that face. So I don't do construction loans. And one of the reasons why we don't do VA construction loans is because it is a very highly specialized loan program. Like that's all you have to do. Because questions like this, I'd be like, yeah, of course you can do it. Then you'd be like, and then I'd be looking it up and you'd be like, oh no, you can't do it. It's different. And why I can't answer it is because different lenders will have different requirements. VA construction loans exist, okay, and we would need like a whole dedicated video for it, and I'd have to bring in somebody else at a different company that I work with that I refer them to, because that's all they do. Like day in day out, they just do VA construction loans. You do 1-time, 2-time construction loans, and that's a lender overlay, right? So normally you'd be like, no, you can't do it. But if a lender's like, all right, they have the poured foundation, they own the land free and clear, they need this much for construction costs, it makes sense then. Okay, like like if it logically makes sense with these banks because they're lending typically their own money and then converting it to a VA loan. It's very different than buying a home and using a VA home loan. A lot of times, there's no, to my knowledge, there's no real secondary market for mortgage-backed securities for these. So if you guys don't know how mortgages originate, is that they're normally based on the 10-year treasury bond and a whole bunch of other factors that go into that. That's why watching the 10-year treasury bond is so important when you're looking at interest rates, because it gives you an indication of where rates are going. But there's also things like margin suppression or risk factors that you don't see. That's why sometimes when the Fed rate drops too much, like in last September, like we talked about earlier, you don't see rate drops, they go up because of risk, right, of what's happening in the market. So that's why all the time it doesn't go hand in hand. So when mortgages are originated, they're guaranteed by the VA, okay? And then they're sold off to secondary markets, and they're more attractive to investors because those loans are guaranteed 25% by the VA, okay? I know it's long-winded, but that's one of the things. To my knowledge, I don't know of a construction loan market. Normally, they hold that money, or they invest, like banks will use their own money to do that, or they'll use secondary investors to do it. And then once that mortgage converts, then to a regular VA loan, then it's sold off into these tranches. Oh, I know that was real long. I was told by my lender that my VA benefits, especially my 100% PNT, can't be used for a home loan because it's not taxable income. That is wildly inaccurate. Like I
Get
can't
another
believe.
lender.
No, we're gonna have to fire somebody.
Yeah.
Let me get their number. I'll give them a call. But yeah, but the amount of misinformation, Dwayne, I'll tell you, is crazy because I'll talk to veterans that reach out from watching the videos. And they'll be like, David, everything you've said is the opposite of what these people have told me. And I'm like, yeah, because we read the VA handbook, we read the circulars, we're education based, not sales based, right? Education is the key, but 100%, you can use 100% of your PNT income. Not only that, you can actually gross it up another 25%. So it's funny. They tell you you can't use it because it's not taxable. I tell you that you can use 100% of it plus get another 25% bonus.
Yeah. And just so everyone knows, I've been dropping some links. Dave has dropped some links. I just dropped his information. Make sure you reach out to him. Put his website in there, www.vahousingeducation.com, and schedule a meeting with him. Also, you can find his contact information in the description section of his video and mine. So
Yeah.
there should be no excuse. You go out and do something and you hadn't talked to David.
No, don't call me last minute and be like, "Oh, I'm closing. Can you look at this?" Don't do that.
That's wrong.
But do it so I can review it, so we can maybe help you negotiate a little bit. Listen, guys, I love to help, right? I'll review stuff and I'll be like, "Hey, it's kind of too late for you. Just finish it up." But this is what you need to know. All right. RV had saying, "Used the VA loan for my first home last year and got lucky. That's good at 5.5. So you kind of locked in during that period." I'm assuming that was probably like August. Would it make sense right now to do an IRRRL as the rates are getting lower again? So I would say this. If you're right now, just so we put some context and numbers around it, because if I give you interest rates where they are right now, there's a million disclaimers and then you have to fit the bucket and all this stuff. I would tell you that if you're at a 6.5 or higher, I wouldn't even I would just schedule a call with me or just go ahead and fill out an application on vahousingeducation.com. So you got a VA loan, you've made 6 payments on that mortgage, you got a 6.5 higher, just submit an application because most likely it's going to make sense. Okay. So you can make that. But if you're at 5.5, I would wait. In general, from a market perspective, VA has a requirement of at least a 0.5 basis point plus 36-month recoupment period. I'm talking like a lender. You have to drop your rate 0.5%, and you have to recoup your closing costs within 36 months. In the markets like the ICE Mortgage Monitor report, which I do videos on, they say to be in the money, meaning that normally for it to make sense to refinance, you have to drop your rate at least 0.75%. Okay? That's one part. The other part is in order for markets to really move across the country, right? Because right now we've seen a slowdown. Last 2 months, we've seen record, like last, I think, 12 years, the least amount of increase in home values month over month has been the last 2 months. Okay. So for some people, that's super alarming. It's not, it's just how everything has come into play. Plus people are listing more properties. So things have slowed down. Not as many buyers. There's market suppression because of rates being a little bit higher or elevated. So right now we're seeing that trend down. So now we're going to see markets recover and we'll probably see a higher increase over the next month or two. Then plus you have delistings as well, where sellers are not getting what they want and they're not reducing prices and taking things off the market.
It was a lot.
That was a lot. But this is what I'm saying. Because we chat, you get the same knowledge that I give.
Right.
Like you, this is the knowledge base you have when we're working together. But this one's for you.
But, I can tell the people that have asked me questions, last couple of people that has asked me questions, you're not subscribers to my channel. No, I know, like David said, this question you just asked me, I have a video on it, range of motion. Even in that video, I'm giving you a link to Amazon's website to purchase a goniometer. That's how they measure the range of motion. That's what is stated in the 38 CFR to get an accurate measurement. You can buy a pack of 3 for $7.99 off of Amazon. I've had veterans say, Dewayne, thank you for giving that information. I took it to the exam because the examiner said they didn't have one. They reached into their purse. It's like, I got one right here. So they cannot do that exam without a goniometer. Now, on that DBQ, 9 times out of 10, they're going to say they did use a goniometer. So in that video, I'm saying, hey, this is what you do. And we don't have enough time for me to go through it. Make sure you go out, look at the video, go to my channel, type in range of motion, ROM. It will come up, and I break it down in that video.
Got it. Dwayne, you want to go a couple minutes over today?
Yeah, we can. Yeah, we can.
You gotta
No,
go. Oh, yeah. Again, my bad for this part. All right, next one is thank you. My realtor set me up with the local VA office. They in turn got me a mortgage company. I'm wondering, and I did watch a lot of videos, so thank you. I like how did I go too fast? I'm in my 60s, will be paying into my 90s. So Frank, I'm surprised that the local VA office gave you a mortgage company. I don't think they're supposed to be doing that. It may have just been a personal recommendation, okay? Because the VA doesn't promote mortgage companies. There are mortgage companies on the VA's website. Like we do stuff with the VBA. Like I'm a community partner of theirs. And so we do a lot of education and hosting stuff, but it's also very upfront. I'm surprised that they did that. But moving too fast, homeownership is where you are in time, not where the market is. If you try to time the market, you're going to lose every single time. Unless this is what you do for a living, you know everything about it, and then you can make money on it. So if you're in, and so another point is that they're never too old to get a VA loan. So you could be 99 years old and get a 30-year mortgage. They can't discriminate against you. I did a whole video on that because I got a lot of veterans that reach out to Dwayne. They're like, am I too old to use my VA loan? I may not make it to that time that it's paid off. Yeah. That's why it's important. I'm not an attorney, but things like putting things in a trust, having VA disability. So if you pass away from a VA disability, then your spouse can get indemnity compensation, and then you can reuse the VA loan later, right? You could have your kids assume your VA loan. So let's tie this in with the old one. I see a lot of this happening for estate planning purposes. Veteran buys the home because the kid is not a veteran. They've lived there for a couple months, a year. The child can come in behind them and assume their VA home loan. Now it's their home and they have their parents' VA home loan. It's the only way you can do that. I need help flipping a land loan into a construction loan. Yeah, just schedule a time with me and I'll be able to help you out with that. I'll connect you. Kimberly, got my 100% ready to purchase a 4-unit and live in one to start living rent-free.
Let me ask this. Let me answer this question. What should you do next? You got your 100%, Kimberly. You taking me and David to Sizzlers. And then we'll explain what you need to do next. I'm just teasing.
Yeah. So one, you can contact me and I can help you with that for sure. I have access to the VA's portal. The other one, you can go to va.gov and request it yourself.
Before I found your channel, submitted claim with 1,000 pages. I would never recommend that. A private medical history got denied. Can I submit supplemental and withdraw the 1,000 pages and just submit the 5 pages they need? Yes or no. You cannot withdraw the 1,000 pages. They are there for eternity. Yes, new and relevant evidence. It could be 2 or 3 pages. And people understand VA employees on quotas. If I got 1,000 pages, I'm not looking through that. I'm going to find some to defer and get it out of my queue so somebody else can look at it. Because if I don't make my quota, I can't support my family because they're going to fire me. And guess what? I just uploaded a video last Friday. This administration has terminated the union.
Yeah.
They terminated the union. And a lot of people saying good. Oh, no, no. Because now if somebody at the VA that's struggling and they're putting the time in to do right by the veteran and they're taking their time, they look through all these 1,000 pages and they don't meet their quota, they get fired. The ones that are employees that are sucking up the management, they're going to keep them around regardless.
Yeah.
But the ones that are trying to do it right, so, I've been in that system. It's you get some managers that are just, I don't know what's wrong with them. Now they got free reign. So submitting 1,000 pages, people are scared for their jobs. So they could be skimming through it, miss it, but at the end of the day, it's your claim. If we come on Johnny Rambo, we talking again next year, and you saying, hey, my claim is still being processed, could be why.
Dwayne, I got a question that just came to me
Uh-oh.
with that question that was asked. Is it a good idea to use AI to upload all your documents and have it create a summary and reference all the pages where different events happened, so then you can make it easier for the rater? That's it. Boom. I'm done for the day.
Yeah. Negative goes right because
Okay. All right.
those.
Okay.
Yeah,
Fine.
what's going to happen? They still got to go. Somebody's got to go through those 1,000 pages, because if they upload it, it could get out of sequence. So if you reference page 52, if it gets uploaded out of sequence, page 52, what you're thinking page 52 is, could be page 800. And I always tell people, short, direct, and to the point. You could ask. I did a video where I was using ChatGPT to help develop a lay statement, and in that video, I had to massage that prompt, go back and edit that prompt like 2 or 3 times. I don't think a lot of veterans are doing that. They're like, "Hey, I want to claim sleep apnea. Give me a lay statement," and they're copying and paste it, and that's where you get yourself in trouble.
Yeah, do not research YouTube, research VA home loans on ChatGPT. That thing is, oh my God. I was like doing research, or I was doing like a video outline, and it gave me the wrong information. I read through it. I'm like, this is garbage. So yeah, don't. Yeah.
I did that one time, and I looked at the regulation, and I was like, wait a minute. I don't think that regulation is right. And I'm like, hey, I don't think you gave me the right regulation. Here's the correct one. Oh, yeah, you're right. That's what it told me.
I know. Listen, I argue with ChatGPT. I literally yell at it and I argue with it.
Yeah.
But it is what it is. All right, next one. I think Grace had a question. Then we'll start wrapping up, guys. Like in less than 3 minutes, we'll be done.
Yeah. Dwayne, would your navigation come up with a list of pyramiding when veterans list their conditions? They could potentially be pyramiding. Good question. Let's talk about it in the next live, Grace. In which he's talking about myself and Free Guy. He was in here. We created a software. We're going live October 4th. I did put some links in the chat. Bring that up. That'll be a little bit more work on my end, because I'll have to go into the 38 CFR, but it's definitely something doable. We could probably put it in the Resource Academy or something like that, but good idea. Just bring it up in our next live, Grace.
Yep. All right, this one, we're going to end it on this one. So someone said Earls add more money in the back end of your loan. And this is what I want you guys to understand. I'm going to break this down, reality of a refinance. When you refinance your home, you have to pay off the first mortgage. They add days of interest. You have a new loan, you have to add days of interest. If you have an escrow account, you have to reset up your taxes and insurance. You have to reset up your taxes, and you have to pay for a full year of insurance up front again. And so that adds a ton of costs, title fees. So you could be looking at 10 grand in title costs. Like we just looked at 10,000 in closing costs or so. We just looked at somebody's loan yesterday, because a lot of people are calling about doing these. And so this is what I tell people. And this is specific to an example. The veteran is going to pay $10,000 in closing costs. Out of those $10,000, about $3,000 are hard costs, and $7,000 are soft costs. Meaning you would have had to pay that anyway. Days of interest, all of that. And the way we set it up, and they'd be getting $4,000 back from their current mortgage company. Mortgage payments about $4,000 a month with taxes. So if it costs 10 grand, and we're adding that to the loan, and they're going to skip 2 months of payments. So they're going to save $8,000, and they're going to get a refund check for the escrow account of another $4,000 in 30 days. So yes, they didn't have the money up front to pay the closing costs, but they rolled into the mortgage. So yes, they increased it, but then they did something smart, which ties back to what we talked about earlier: principal reduction. The VA loan doesn't have a prepayment penalty. So on the first payment, you can make a $10,000 principal reduction. And that way,
you said 10,000.
So like, so if you skip your 2 payments, right, you save that money, you get your earnest money, you get your escrow money back from the servicer you just refinanced out of. You take that money you saved and do a one-time principal reduction to the mortgage to bring the balance down.
Okay.
Now you're basically at a net zero. That's what you want to be at. But Dwayne, some people don't do that, and for some people, they need the money more than they need the savings on the like to be able to do a principal reduction. So it's really up to everyone out there on how you go through that process and what you do. So, but I appreciate everybody coming on here. Thanks again for being flexible with us, not yoga flexible, but being flexible on, because sometimes people, Dwayne will be like, David, are you flexible on this? I'm like, not yoga flexible. I'm a little tense, you know what I'm saying? But about the time change. And yeah, you guys have any questions, please let us know. Anything closing thoughts, Dwayne?
No, just stay in the fight. We did put some links in the comment section. Again, the VA Benefits Navigator, we're in beta for it right now. Free guy, he's in here, him and I. We built this software. We're launching October 4th. We rented out a studio here in Tampa. We're going to start marketing. We've already started marketing, but definitely looking forward to that. And make sure VA Home Loans, call David. Okay. If he's saying he's going to talk to you, call him.
Yeah.
Call
I don't
him.
bite. I can't bite over the phone.
Yeah. Just call him. We've had conversations. I showed him my closing. And he's like, yeah, they got you for like that 1,800. I'm like, oh, man. But again,
cool, guys.
Yeah. Thanks everybody for showing up. Definitely appreciate all the support.
Thank you.